Hello investors. So it's been a tough month for global markets, but today I'm going to come and dispel the fear that most people have that everything is lost globally. You've been hearing bond yields are going up and the dollar is going up and UK is having its own problems. But the fact is that yes, we have had a sell-off of about 8% in the S&P 500. Indian markets have held on very well. We are just down about 4%. And the best part is your portfolio is hardly down under 2%. In fact, we were up most of the month, but the selling towards the late part of the month was so strong. But we have really done well and outperformed. We continue to do so. The encouraging part is that those changes we have made to your portfolio in the last few months are helping us to do the catch up. And we feel that as these markets bottom out and go ahead, these stocks are going to really play out very well. So what makes me so bullish on the market when everyone is fearful, everyone is talking about a crisis, crash, etc. So let me share with you, as usual, a few charts and speak on data rather than fear and panic and hope and greed. Let's talk on what we see in terms of actual numbers, actual data. So the first chart I'm going to share with you is the S&P 500. Now I call this the mother index because it represents the top 500 companies in the US, and these most of them are global in nature and a very good representation of global markets. So what you will see is that the S&P 500 has been correcting from December of last year. So we've already had about a 10-11 month correction. In fact, you will notice that it is almost coming to this black horizontal line, which was the top of the market before it fell and COVID. So essentially the US markets have given up all the gains that have happened post COVID. We've returned to where they were in the top of 2020. The interesting part or the opportunity I find is that they are extremely oversold. What I mean by oversold is that when there is extreme pessimism, a lot of stocks get sold. And in fact, the selling is a lot more than desired. But this becomes a great opportunity for investors because very often the bounces that happen from oversold markets are the most rewarding. And today we are at that point in time. Mind you, I'm not trying to predict the bottom. I am not trying to say that this is it. But the fact is that historically we have seen that when there is heightened pessimism, which you have right now, when markets are extremely oversold, very often these markets have the best risk-reward ratio. So I want to repeat, I am not calling the bottom. The markets can go lower, but for an investor with a time frame, the risk reward is very, very favorable. So let's look at this whole thing about risk reward and let's see, we've done some work on it. Let me share it with you. So what you see are these wiggly lines up and down. So the S&P 500 has 500 stocks. There is something called the 50-day moving average, which is nothing but the average price of the last 50 days. When the stock price is above that, we say it is bullish. When the stock price is below that, we say it's bearish. As simple as that. So when the number of stocks or the percentage of stocks above the 50-day moving average is high, the market is bullish. But now look at the chart and see that where the green circle is, the number of stocks above the 50-day moving average is just 3%. That means 97% of the stocks are in the bear market. And historically, you can see that we have mapped this for the last 12 years, that whenever markets have reached these oversold levels, the returns for the investors were actually best in the subsequent years. The last happened was in 2020, COVID fall. You know what happened after that, how the markets took off. Prior to that, we saw this reading in 2008 when the financial market crisis happened, and you know what happened to the market after that. Another data point was 2010, which was an extension of the 2008 fall. So what you will see is that just as where the top black line is a time of extreme optimism, where 95% of the stocks are in the up zone, today 97% of the stocks are in the down zone. And historically, you can see that whenever this has happened, the best equity returns have followed that. Well, you may say that's just your thought process. So we went a step ahead and we went and did an analysis that as and when these happened, what were the kind of returns the investors had on a 1, 3, 6, 9 months, 1 year, 2 year basis. So of course there's a lot of data. In the white column you'll see the kind of percentage of optimism left or extreme pessimism, and you will notice that 1, 3, 6 months, 50% of the times were very, very rewarding. But the most interesting point is on a 1 to 2 year time horizon, which is covered in the yellow box, you've always had phenomenal positive returns. So for an investor and not a trader who has that time frame, these tend to be the best times to invest in. Again, I repeat, I am not calling the bottom. I am saying that these are markets in a very good risk reward ratio. You hear buy when there's blood on the street, buy when all are bearish. Well, this is the point. And this is what data is showing you. And that is what I really want to share with you. That is what makes me optimistic. Not for the next 1 month, next for the 3 months, but on a 1 to 2 year time horizon, this is the best time to top up. This is the best time to allocate because there's fear, there's panic, and there's pessimism. Now let's get to India, because that's what ultimately matters to you. This is the chart of Nifty. The first thing you will notice is that we have held on very well compared to the previous chart, the S&P 500. In fact, we have been correcting in a narrow band, and as of last month, we had almost broken out and made me optimistic. Yes, we've had a bit of a fall from there, which I shared with you. It's about 4% from the top. But the interesting thing is that I feel when this band breaks out, India will be among the first markets to break out to global highs. And I feel that we are entering a phase of absolute outperformance for India. And let me share this with another study that we have done. And mind you, these are proprietary studies we do at Marathon. These are stuff not you'll get anywhere, or it's not the average garden stuff. This is a ratio chart. A ratio chart is nothing but studies a relationship of one index versus another. The Nifty 50 I showed you, and the S&P 500 I showed you first. So this measures the relationship between the performance in Indian markets versus US. You will see that between 2000 to 2008, India did very well because this is Nifty versus S&P 500. But post 2010, you will notice that actually the US markets did well. So for 10 years, you've had an outperformance of the S&P versus the Nifty 50. But what is interesting is where you see the red circle, we are breaking out of a 10-year range. So when people say, how delinked are we? Oh, if US has fallen, we are also going to fall. It's not necessary. Yes, if there is a big global fall, we will fall. We saw that last month. But the fact is that if markets do not crack, if they remain stable, I think we are entering a phase of outperformance. And this optimism, I feel, is reflected in the market. And this has been the guiding spirit for us in the way we have rejigged our portfolio. We think that we are getting into a phase where you will have an upcycle, industrial cycle, and you will notice that most stocks we've entered into are facing core industries, engineering, capital goods, infra, defense, not dependent on exports, but dependent on domestic demand and domestic manufacturing. One such stock we entered, and I have a detailed report being sent to you along with this video, so you can go through that. But just to touch on the three stocks, one is Apar Industries. Again, a big player in the whole electrification. Conductors, transformers, specialty oils, they are top in the class, and they have a very good global standing as far as these products go. We feel that this is going to be a great company, and we feel that based on valuations, there is a good upside potential. The second stock we bought was Hindustan Aeronautics, HAL. You must be seeing it in the news just as a few days ago, the Dhruv helicopter was launched. Where was it manufactured? HAL. You've been hearing about Tejas. Where is it manufactured? HAL. So anything to do with avionics, aviation, helicopters, it is Hindustan Aeronautics. And in this whole, domestic manufacturing of defense products, which is at about $1 billion today, and the target is about $5 billion by 2047. I think that HAL is going to be a very big beneficiary, and this is a very, very concerted effort by the government towards local manufacturing. And HAL is right up there, a big beneficiary in this play. The third stock we are looking at is Tube Investments, TI Industries. So obviously it's into specialty steels and tubes, etc. Also now famous for cycles. It has a couple of brands like Hercules, BSA, etc. But the interesting opportunity we see that they are in the forefront of electric mobility. Electric mobility is not just electric cars, but there are electric three-wheelers. They just came out with one a few weeks ago. They are into electric tractors and a whole range of solutions for consumers in the range of electrical mobility. We think this is again a big opportunity for investors. So we have been working hard on your portfolio, and we feel that this strategy is going to really help. Number one, in a market where there's global pessimism. Number two, in India, a market which we think is going to be relatively outperformed. And number three, in sectors and themes and the stocks that we are getting in, is I think a great time for investors to deploy top up. I know the sentiment and headlines that you read are very different, but as they say, buy when there's blood on the street. There is blood on the street, and that's why we urge you to top up or to not sit in too much cash. Don't go short. Don't be very pessimistic. I feel we are entering a great phase for Indian markets. With that optimistic note, I leave you for this month. Thank you very much.